Peter Rose, Longwood Currency Trading. All right, so here's the deal. How do I trade versus how I would teach somebody else how to trade? Trading and learning how to trade are two totally different things. It's just like driving. You don't teach somebody how to drive the way that you drive. You teach them so that they learn the basic skills and mechanics of driving so that then they're able to drive. Too often the emphasis that I see from the education that's available out there is that you're being taught methodologies, methods of trading, golden crosses, Bollinger Bands, long-term position trading, scalping, whatever it is. Those are all methodologies of trading. But there's the critical word there, of. Methodologies of trading. In other words, they're variants of trading. So the question is, well, what's trading? That's what I teach. And from there, you're able to scale that and make a lot of money. I make a lot of money. Well, not in relationship to the Lamgo guys, because I'm trading a six-figure account, and I'm cautiously, just in the last year, this is November of 2022, I started out at the beginning of the year trading 3 lots, and I'm now just to the point where I'm trading 20, 25 lots. That's not all the money that's available to me in my account, but you don't trade your whole account. You trade a percentage of your account so that you've got plenty of buffer room. It's all about risk management. The problem with what you're seeing out there in the educational world, well, before I get into that, who am I as an educator? I spent over 50 years in the martial arts teaching. Teaching the martial arts is ridding people of their fears based on their confidence to defend themselves in life-threatening situations. It's not a trivial matter. The educational process is critical. The conveyance of information and the solidification of that information as the right thing to do is a very difficult and complex task for the instructor. I've been doing it a long time, and I've had students that have saved their lives as a result of that training. I spent 40 years investing, small investor in real estate, and was able to retire because of that, paying cash for my house and $40,000 in renovation fees, all before I sold my other house because of my investment background, not because of my software engineering salary, which was 6 figures. I understand the financial markets to a degree that a trader would need to understand them. I'm not a stockbroker or whatever. I've been studying these markets since the late 1970s. Yeah, I'm 73 years old, okay, so that you understand what my background is to make the statements that I do. Because sometimes I'll get an email from somebody, who the fuck are you telling us blah, 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 blah. I'll tell you who I am. Read the bio, and that's who I am, before you criticize me. I've lost money trading. I've lost money in real estate. I've gained that back. I have the proud distinction of being able to tell you that I've lost $1 million net worth twice in my life due to economic collapse, and that was my entire net worth. But I was able to make that back each time. But it took me 10 years each time because I was limited to the appreciation of properties, the amount that I could manage my rents, keep my expenses down. Those are all limiting factors to your ability to increase your net worth. In the currency markets, there is no limit. That's why I sold off my real estate portfolio. I retired first as a software engineer, sold off my real estate portfolio, and I've been studying the currency markets since 2007. Didn't get involved in trading them until 2012 because I was doing the study as an academic exercise because I have a degree in physics, so I'm interested in this stuff. And then in 2012, I blew through 2 mini accounts, right to the wood. Figured I needed more study. Studied, went into demo accounts, took a couple of courses, read stuff, read hundreds of books. Well, maybe not hundreds, but 100 anyway. And in 2018, funded my a live account with $40,000, $50,000, I think, $45,000, and followed the training that I thought that was consistent with what was out there. The training is, number one, for the most part, invalid from my standpoint as a real estate investor and as an educator. And it's also not designed to teach you ultimately how to grow your wealth in your account. It's taught to protect, and that was the point that I was about to make, is that these rules about don't lose more than 1% or 2% of your account on any given trade, or 2% a day. Some folks are saying 0.5%, don't risk more than 0.5%. Hey, that's fine. If you're trading a 6 or 7 figure account, 0.5%, that's a shit house full of money. And you know you're wrong. You know, when you lose 0.5%, you cut it loose because you know you can trade later and easily make that up. Just by increasing the size of your bid lot, you make that small loss up. Very different than what you guys are faced with trading a 4-figure or a low 5-figure account. You have to learn how to trade on a 4 and 5-figure account. You have to learn the mechanics, the plumbing, the principles before you can actually trade. It's a learning process. It's like your driver's permit. I don't mind you guys that are sending me emails, oh, I want you to be my mentor and I want you to teach me to make $100,000 a year. Great. Let's focus, first of all, on the percentage against the money that you have. If you're trying to take a $10,000 account and run that to $100,000, I'm sorry, but you're not going to be able to do it. Maybe if you're really, really good and really, really lucky, you could trade at 200 to 1 and trade $300 a pip on that $10,000. And as I've said many times, you can take 6 or 7 lucky hops and you'll get to 6 figures. More often than not, a small reversal because you don't know how to trade will take your account out. So you reload it and you try it again. Instead of paying somebody to help them, and it costs a lot of money to have somebody who knows what they're doing help you. Anybody can help you for $500 fucking dollars or $2,000 because they just write these books out and send them out to you and teach you what a pip is and how to size your bank and all the other bullshit that you can learn from babypips.com. Because they're locked into the fact they don't really know how to trade, many of them, because they got lucky, they got a big account, and all of a sudden now I'm afraid of losing it. So now they come up with these ridiculous, don't lose more than 1% of your money on any given trade, or 2% on any given trade. Protecting your money. If you want to protect your money, boys and girls, go put it in UST bills right now because you can get a little over 4%. 6 months ago, you get less than 1%. So you get 4% now. Go to Vanguard index funds or some index fund. that's a no load or a very low load, because some of these things will catch you for 2%. Some of these mutual funds are ultimately, they'll tell you it's a percent, but it's really 2 or 2.5%. You have to be very, very careful and financially astute, or you will lose hundreds of thousands of dollars potential over the course of your life investing in these safe investments. An index fund should get you 6% over the long run. If you invest in the stock market, you're taking a little bit more risk, but you'll get 8% over the long run. You want to do real estate. Yeah, well, it's a little riskier, but the real estate itself over the long run will appreciate about 8% a year. And then on top of that, you add the fact that you've put a down payment down and you're getting cash flow from your rents, and you add the rents onto the as a function of the amount of money that you put down, and based on your down payment, you're probably getting 20 or 25% a year on your the money that you put into that real estate. And that can go wrong on you. As I said, I've lost $1 million twice doing that. And I've certainly lost a lot of money trading currencies, because when I started with that large account, that $45,000 account, I lost $40,000 in about 6 months. And I had to step back from it. And I've said many times, I looked at what was going on. I looked at the education that I've been studying. I thought I could trust that stuff. When I started learning real estate, I went out and I asked for help and information. I talked to somebody who was a real estate investor and would do this, do this, do this, and it was right. It was true. And then I learned from that, and I was able to do it on my own. Well, but you can't do that in trading, because most of these people don't know how to educate. They really don't. Some of them don't know what they're doing, and so they base it on Bollinger Bands and Fibonacci's and all the rest of the crap, because they really don't know how to trade. They know how to use these indicators to explain what they did. Now, they may know what they're doing, but they don't know how to explain it. And they actually believe that a Fibonacci number is going to reveal to them what to do. I can tell you with a degree in physics and almost a minor in math that that's horseshit. And if you want instant riches, listen to those guys and take your account to the wood and then come back and talk to me. But when you talk to me, it's going to cost a lot of money, because I'm talking with people who want to earn that $100,000 and that are a year and are serious about doing that. Let's stop at the $100,000. Let's just say you want to earn 30, 40, 50% on your risk. Is that possible? Well, look, you could do it in real estate, 20%. But you're limited on what you can make on the real estate by all those limiting conditions that I talked to you about. In the currency market, you peel those back. That doubles at least the potential. You can lose your money in real estate because you're stupid, and you'll definitely lose your money in currencies a lot faster if you don't know what you're doing, or if you're stupid, or if you're greedy. It's very tough to get greedy in real estate because the price of entry is very high, and so it causes you to stop. In currencies, it's not. You can trade $1,000 or $50,000 or $500,000. It doesn't matter. The cost of entry, you want to trade, you can trade 20 or 30 lots on $1,500, for God's sakes, at 300 or 400 to 1 leverage. And there's some traders out there who really know what they're doing who do that. Go visit Tom Howgart's site. He trades a small account from a dollar standpoint, but he just pushes the limit on the number of lots that he trades, and he will tell you, quite frankly, that he blows out accounts all the time. But because he's only trading with $20,000 or $30,000 maybe, and he's trading these huge amounts, a little pullback takes him out. But when it doesn't take him out, it just balloons into massive amounts of money. That's how you trade. You don't trade by worrying about a 1% or 2% loss on any day. The problem is if you're starting out and you have a $10,000 account, you have to be very aware of those guidelines until you get your win-to-loss ratio and your average win value up to the point where over the long run you're going to be net positive. Because if you're not net positive, if all you're doing is throwing your ante on the table and closing your eyes, that account will go to shit really quick. So the advice to not take more than a 1% or a 2% loss means that the amount of money above margin that you have, for example, to trade a pound-dollar pair now is probably $6,500 of just margin, or $6,000. I forget. I don't know what it is because I don't give a shit. If I'm going to trade one full lot, I trade $10,000. So let's say the margin is $6,000. So you need $6,000 just to step up to play the game. What are you going to trade with $6,050? A half a pip will knock you right out so that you can't trade a full lot. I say, well, I can always trade mini lots. No, you don't want to trade mini lots. Once you get to the point where you can trade full lots, trade the full lots. You're not going to grow your wealth in that manner. You may grow your account, but you won't grow your wealth. That's what I'm interested in teaching somebody who's going to ask for my help, how to grow their wealth, not how to grow their account. And so my principles that I used when I was trading the low five-figure, mid five-figure account sizes was the same principles that I work with in getting somebody started driving that car, right? To teach them how to trade, not based on a methodology, but how to trade. Once you understand how to trade, now you put a lot of money into that account and you trade that account. Sometimes it may be a day trade, sometimes it'll be a carry, sometimes it'll be a scalp, sometimes it'll be a swing. It doesn't matter because you're trading and the methodology that you use is immaterial because it's just blended into the fabric of your trading. Now the next step that you want to get to, and what this video is about, is how do you maximize that account? How do you make a lot of money? You make a lot of money. It's very simple. The more money you want to make, the more money you have to put at risk. You're not going to make $20,000 on a $10,000 account. I mean, again, unless you're trading 200 to 1. And so you say, oh, well, teach me how to trade, and I'll trade at 200 to 1. If that's your attitude, don't call me for help, because that's a poor attitude. That's like somebody saying, well, teach me how to drive the car, and then I'm going to go stock car race. That's stupid. There's a lot of steps that you go through before you're going to put your life in danger on a stock car track. And it's that way in trading. And if you don't want to listen to that, that's okay. Watch my videos. Maybe I can help you out that way. Go to some of these jackasses that promise you the moon and that will teach you to trade at 200 to 1, and good luck to you. Maybe 0.5% of you will actually survive and make money, and the rest, unfortunately, will lose your money and get discouraged with it, and then stupidly go to crypto or whatever the next fancy thing is. Oh, where are all the crypto guys today, by the way? If you're watching this video in 2025 or something, go back to the news that just came out about LTX and the entire crypto market right now, and all the people that got caught, all these retail traders that are out there looking for the bigger fool theory, trading crypto. They're all wiped out. They're gone. What are they going to do? Well, they don't have any money, so they're certainly not going to come back to FOREX, because the crypto people pooped all over the FOREX market. The stock market people poop all over the Forex market. Nobody wants to trade the Forex market because they think it's risky. It's not risky. And I'm somebody who's very competent in risk management. But nobody wants to listen to me. You want to grow your account really big? How big do you want to grow that account? And this is the conversation that I have with someone when I'm thinking about working with them. I mean, you could pay me any amount of money that you want, but I'm not going to teach you unless I think that I'm actually going to help you. And the only way I think I'm going to be able to help you is if you pay attention to listen to me and you look like you're willing to do the work and do that base learning so that then we can trade together as peers. I'm not going to hold over you for the rest of my life. My karate students, I try to make my karate students better than I am. And I have some students that are in some areas. As someone at the grandmaster level, I'm good at all areas. I'm very good at all areas. But that doesn't mean that somebody can't be better than I am at one of those areas or two of those areas. That's a wonderful thing. I just happen to be really good at everything because I've been doing it for a long time. You get pretty good at something when you do it for 10 years or 20 years. You know what I'm saying? And I've been doing it for over 50. And so it isn't that you need, I've said I've been in the currency market since 2007. It's 2022 right now. You don't need all that time to get good in the currency market because it's not that tough. It's not as tough as learning real estate. It's certainly far easier than trying to learn how to trade stocks or options and commodities. It's very simple. The market is inordinately complex. It's inordinately chaotic and random from a mathematical standpoint. But in that chaos, there is form. There is predictability. For those of you who are technically oriented, you might want to look into the Brownian motion. Albert Einstein was very key in forwarding Brownian motion theory. It has to do with particles in a fluid, the movement of particles in a fluid, which is a little bit like price in this huge Forex market. So the market is huge. You could take $50 million out of that market in profits, and it wouldn't cause a dent anywhere. That's how good it could be. So my goal, after making a retired a millionaire from my real estate, well, let's do this in currencies. I've got the basic format down. I've gone from trading three lots at the beginning of the year to trading 25 lots, 10 months later. There's a learning curve. You might not be able to do it that quickly because I did have more background than perhaps you would. But if I'm working with you, my goal would be to try to show you how to make those transitions. You might not have the money to make those transitions, but at least you would have the basic core understanding of what you're going to need to do as you go up in your bank size as to how to manage that money. And I'm not talking about just risking 2%. Where you're trading a 1 lot or a 2 lot or a 3 lot or something like that, you better be conversant on risk management for preservation of capital. You don't want to preserve your capital when you have a lot of it. You want to push it to the max and go. It's like a fire. You got to be very careful how you start that fire. You don't want to knock the little embers and the little kindling off to the side because it'll knock the fire out. You got to be very, very, very careful. But once you get that fire going, you throw a bunch of logs on there and get it roaring, and then it heats up the house. We did that last night here at the house. I don't know if the thing shows the wood stove over there, but you very carefully got the wood stove going, got a nice little fire going until the stack temperature got up to about 350 degrees, and then I dumped a bunch of wood on it, opened the damper up, It got to a big, horrendous burn rate. The fan kicked on. I shut it down, and the thing just warmed the whole house up, and it was beautiful. And I used very little logs after that to keep the house warm all night, and it was down around 30 degrees last night, Fahrenheit. And that's what you do when you trade. So when you listen to my videos or you look at my blog posts, which I haven't done any blog posts in a long time because nobody reads them anyway, so what difference does it make? I talk about backing up the truck. I go in cautiously. I'm very risk management aware. I go in very carefully. And then I get my position. I build my position very gradually in the beginning. And then I began to stage in more lots after a certain point. And at a certain point when that happens, I back the truck up and dump it all in. And yes, I can go highly negative even at that point. And I have to be willing to let it go highly negative, because the price action, or as Jesse Livermore, the tape, is telling me where it wants to go. And every now and then it's like a swimmer. Every now and then you got to tilt your head and you got to take a breath. That slows you down, but it's worth it, because that breath will take you the rest of the distance. And so when I talk in my videos about backing the truck up, and I said I've done that 3 times in a row now over the course of the last year, and I've had $30,000 net profit months 3 times. I had my largest single position win, $15,000, a couple of weeks ago. I had a $24,000 day win a while back, but that was trading multiple positions during the day and taking advantage of that. But I had one position a couple of weeks ago that was a $15,000 gain. And the $30,000 months were when I had the opportunity to back that truck up and take a risk. Some of those months I was $20,000 down at one point and more. But because I had conviction in what I was doing and I had the money to warrant the risk, I could hold my position. But you can't do that when you're learning to trade. You can't do that if you're trading with 2 or 3 full lots. God forbid you try it on a mini account. So don't call me and ask for help if you think this is magic and you're just going to all of a sudden be making $1 million a year. Could you make $1 million a year? Well, I certainly have seen quite a few people out there. If you're watching some of these videos, there's a lot of people out there that have made millions and millions of dollars. So why can't you? But I'll guarantee you, if you watch these other people out there, these so-called educators, and they're telling you don't risk this and don't do this and don't do that, all they're teaching you how to do, they're not teaching you how to trade, they're teaching you how to protect your account. But where's the information that's gonna allow you to go nuts and back up the truck? It's not there. And most of the information is based on these indicators that break down and are invalid. But first of all, you don't use indicators for entry analysis. You can use indicators later for what they call confluence of what's been happening in the past to develop a probabilistic determination of what may happen in the future. But that's all it is a probabilistic determination based on what happened in the past. You look at those charts and you'll see 5-minute candles that are 40 pips when the ATR is 5. So if you're going to try to do these things long term and think, oh, look at that, we've had four 15-minute candles of 60 pips each, I could have got in that, and then look, then it started to come back down, and I would have got out here. Would you? Because a lot of the times those 150 or 200 pip explosions into 15-minute candles over an hour period of time are retraced, and will catch everybody that didn't get off the bus in time. Nobody's going to teach you how to do that. But that's what I do. I have that in my Advanced Solutions book, which is 250 pages. I have whole sections on that, as well as in the second and third course books that I wrote. And they're really not course books. They're my structuring of the trading plan and the process so that I could get to the point where I could back up the truck. I'm talking about making $1 million. If I put $1 million into the account and then I got to make $1 million on that, in other words, I got to make 100% on that $1 million in order to do what I wanted to do. Because I want to make $1 million. I don't want to have $1 million. There's a big difference. And there's a big difference then in the way that I'm trading now than I was trading before, and is certainly the way that I would be teaching others how to build that base of knowledge so that they can say, well, I just backed up the truck and I made a shithouse full of money. That's the position you want to be in. You're not going to get there by babypips.com, and you're not going to get there by reading a book. You're going to really have to sit down and think about this stuff, put it into perspective as to what you're going to do. You're going to have to risk some money by trading a mini account and making a lot of mistakes. And if you don't have any guidance, you may not be successful. You really do need somebody to help you out. But don't send me an email on a wish and a prayer. I'm not interested in that. I'm interested if you have the capability of putting, at some point in your life, putting $30,000 into that account so you can make that grow, because it's about that $30,000 level. 3 lots at $10,000 a lot. I mean, you need far less than that if you're going to trade at 200 to 1. But you have to learn how to trade first. But if you're trading at 200 to 1 and you have a $30,000 account, and you know what you're doing, man, that's going to be great. Would I do that? No, I wouldn't do that, because the downside is too much. And I'm 73 years old. I'd like to see $1 million in my account in the next couple of years, and that's certainly possible. And I have 6 figures now, and the more than 6 figures that I have over the 6 figures is 100,000. I've got a lot more than 100,000 in there, and there's quite a bit of that was made in the last year. Because I'm able to achieve right now 80% return against my risk. So whatever I was risking there, I've averaged that out, and it's about 80%. It's actually 90%, but who's worried about that? Because I'm willing to risk 30-40% of my account, because I'd still be way ahead of the game. So if that thought makes your anal sphincter clamp up, then you're not really interested in making a lot of money. Play with your mini accounts, have fun, maybe pay your electric bill. But if you want to learn how to grow your account, you have to first learn how to trade and then learn how to back up the truck. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.